Hi, it's Andy Hoffman, Media Director of Miles Franklin Precious Metals, again, celebrating our 25th anniversary this year and proud of it. It's Friday, March 14th, around midday, and I have a lot to talk about, so I'll go quickly. Until today, it was a very quiet week on the economic front. That is, aside from significantly lower than expected Chinese manufacturing retail sales and capital expenditures numbers. And if you can believe that is, if you believe their admittedly erroneous data. Then again, any nation that purports 7% GDP growth when their manufacturing and service PMI readings are either at or barely above recessionary readings, it should pretty much be ignored in the first place. And as we all know well, governments pretty much always err to the high side, except of course when they need weaker data to foster their near-term money printing goals, such as when the BLS purposely puts out weak employment data when interest rates start to rise too fast in order to aid their efforts to, as I say, QE them back down. That's the gist of what I wrote in last fall's 3.0% Enough Said, which I view as a must-read article. And actually, these notes were written Thursday afternoon before this morning's epic plunge in U.S. consumer confidence, as well as the comical negative PPI reading as I pass my local gas station and see prices near their all-time highs here during the non-driving season. And that actually prompted me to write this morning's article titled Deflation and Why You Need to Own Precious Metals Now. And when I say deflation, there were quotes around it. Better yet, it was just reported this morning that foreigners sold an incredible 104 billion of U.S. Treasuries last week, by far a record level, which should put an incredible amount of pressure on whirlybird Janet Yellen to pause and reverse the so-called taper later this year, which I'll get to in a minute. And if you go to Zero Hedge, by the way, you see the article about this the Treasury selling last week. You'll see just what an incredibly huge amount this is compared to what we've seen for recent years for on a weekly basis. Well, otherwise, the big news of the week is the Chinese economic collapse, which care of a $14 trillion shadow banking industry, which means non-banking entities making loans. We've seen the history's largest real estate and construction bubble, which I observed firsthand last summer. It truly was incredible taking a train from Hong Kong out to Guangzhou and not seeing like a square inch that didn't have buildings going up on it. The Chinese government is now starting to allow these loans to default. And with real estate prices already starting to roll over, this is a very, very ominous sign for a still communist-run economy that has been erroneously viewed as the world's growth engine, in my view. Sure, they've taken all the manufacturing jobs from the world, as they would have anyway, with such low-cost labor. And they've built huge surpluses, which they've wisely used to buy gold and other real items of value. However, they still have 1.5 billion mouths to feed, and many who desperately need the government's help. And now that the global economy is collapsing, as evidenced by a massive 18% year-over-year decline in China's February exports, and no, that's not a typo. Demand for Chinese goods is going to drop dramatically, and therefore the printing presses will have to continue. My article yesterday was titled Retail Apocalypse, referring to just U.S. retail demand, but it could just as easily have referred to any other country. And now that the Japanese sales tax is set to rise in just 2 weeks from 5% to 8% and then onward to 10% next year, there goes another big Chinese customer, who consequentially, both of whom are dramatically reducing the value of their currencies to gain market share amidst this collapse in demand. And, that can only end badly. In the most terrifying article I've ever read, which was a piece I put out a couple of days ago, I discussed the horrific Chinese real estate bubble, it's not a new concept. I mean, all you have to do is watch the 60 Minutes piece about the ghost cities that came out last year. But just reading that article, it really shocked me as to just how bad it's gotten over there, and thus how bad it's going to be. And then I followed it up a couple days later with a piece called Dr. Death regarding the collapse in copper prices. as people have referred to copper as Dr. Copper because it's so leveraged to economic activity. Copper prices are down 35% in the past 3 years, but 10% in just the last month alone. And they've collapsed through multi-year support at $3 a pound like a hot knife through butter. Not to mention record Chinese iron ore inventories and a 35+% decline in iron ore prices. And actually, on Wednesday, I believe it was, we had the largest one-day decline in the Baltic Dry Index, which is a measure of global shipping activity, I think in the past 4 or 5 years. Copper and iron ore are probably the two commodities most leveraged to China's, quote, growth miracle, so nothing could be more ominous for the global economy. And now that the Chinese government is allowing the yuan to decline against all those derivatives betting otherwise, which are going to have huge losses, as I wrote about in Chinese Financial Torture last week, they're clearly signaling the PBOC's printing press is about to go nuclear. To wit, they already printed 3 times more money in January alone than the Fed and the Bank of Japan combined. And now that the shadow banking industry is on the verge of collapse, as well as economic demand per the commodity prices, they may have to unleash trillions of capital just to kick the can a tiny bit further. And that wall is coming pretty quickly where the can's going to hit. Remember, they could never get rid of their $3+ trillion of reserves or the 1.2 trillion of U.S. Treasuries without crashing the system entirely. Thus, they simply do it slowly and as quietly as they can. Although, as you saw last month, I think December, they sold 48 billion of Treasuries, and now when you see 103 billion of foreigners selling Treasuries last week, you could see that the quietly part is starting to change a bit. I mean, it's a game of global financial musical chairs, and it's coming to an end, which is why they sold so much Treasuries last month, and also why they imported more gold in January than they ever have in any single month. As the game nears its end, China will become more and more obvious in what they're doing, causing more and more people to see what they're doing and emulate it. This is why the bottom in precious metals is probably long past us, and why the Fed will probably have to ramp up the printing presses sooner rather than later. And how opportune, as this coming Wednesday is the first FOMC meeting for new chairman Whirlybird Janet. She already told Capitol Hill last month that the Fed remains highly data dependent, but what she really fears most is falling stock and bond markets. Thus, with global equities in disarray due to the Chinese economic fears and, Ukraine, among other things, perhaps just 1 month into the job, she'll be back at what she said, doing what she said last week, that she'll, quote, do whatever she can to help the economy. She hinted at the end of tapering if need be, and even the use of all available tools if needed. I know she's dying to continue tapering from a credibility standpoint, but there's simply no way she can do it. I mean, the fact that they're lying about tapering isn't even relevant, as I wrote in Proof of the Tapering Mirage a few weeks ago. But what really matters is what she says, and the weaker the markets are, the more dovish she'll be. And if, God forbid, markets are still in array by Wednesday afternoon, when they make their announcement, she gives her first press conference, don't be surprised if she does in fact recant on a year's worth of bogus propaganda about tapering. And speaking of the Ukraine, whatever happened to Putin's softening stance? Or I should say, softening stance. The justification for attacking precious metals and goosing stocks the day after last Monday's big market fear day. When gold was up a lot and the market was down. There was never any softening in his stance, and since then Russia has practically annexed the Crimea, while all NATO and Obama could do were whine and warn. The Crimean parliament put out a referendum to secede from the Ukraine and rejoin Russia last week, and it'll be voted on Sunday. If it passes, as expected, the Western bullies will really be painted into a corner. Pathetic threats like Obama's Wednesday to release oil from the strategic reserve will do nothing to stop Russia or the oil price, especially if NATO attempts actual military force. I mean, is this the black swan we've been waiting for? Maybe. And frankly, it's Friday afternoon and John Kerry said, if this referendum passes, there'll be some major measures taken on Monday morning, whatever that means. But irrespective, it's immaterial. in the big picture of the global fiat Ponzi scheme. It's collapsing anyway, and all this will do will make it collapse faster. And finally, as discussed in last week's Silver Anniversary article commemorating our 25th year in business, the U.S. Mint silver demand is started the year so briskly, it is set to shatter last year's record levels. And this with quite obvious rationing. In fact, it's not just covert. They are telling some people that they're rationing about 1.1 or 1.2 million silver eagles a week. And we've never seen this in a non-crisis period. We've seen plenty of shortages, but we've never seen just a flat out rationing when supposedly all's well. The cartel is doing everything in its power to slow the current inexorable precious metal rise, including comical cap of last resort attacks both yesterday and today at the standard time of 12 o'clock noon Eastern Standard Time. I've been writing about this for so many years. But frankly, the surging global physical demand looks likely to render such blatant efforts moot. And thus, when all is said and done, I'm guessing 2014 will look a lot more like 2011, that is, until the attacks late in the year, than what I call the historical manipulation year of 2013. And the entire world is starting to catch on to this, both to the manipulation and to why people need to own gold. I mean, my God, today, the front page of Yahoo Finance was why you need to own gold. Ultimately, gold and silver will power to all-time highs in all currencies. And then, when fear of fiat currencies really emerges, look out above. With so many global currencies either collapsing or on the precipice of, the final game-changing end to the gold and silver musical chairs game will abruptly end at some point in the not-too-distant future. All at once, everyone will know the gold and silver is gone, and the dollar, yen, euro, and even the yuan in its current form are worthless. And if you haven't protected yourself by then, it will be too late. And thus, we simply ask you to give us a call at 800-822-8080, and we'll answer all your questions with no pressure at all. Unlike Tolving, which went out of business last week after running what appears to be, not yet confirmed, but it has the appearances of, a Ponzi scheme, we will always be honest with you. We've been around 25 years, have an A+ Better Business Bureau rating, and don't have a single registered complaint about us because we simply will tell you the truth. Anyhow, that's enough to digest for what could be a very turbulent weekend and week, and I look forward to talking to you next week.